Hello and welcome to my channel. I am Rekha. This is my first video, so please support me and kindly subscribe to my channel. This section is understanding what is financial management. Financial management is operational activity of business that is responsible for obtaining and effectively utilizing the funds necessary for efficient operation. That is, financial management is concerned with efficient use of important economic resources like capital funds. So, in simple words, financial management is a set of administrative function which relate to the management of finance, both its sources and uses. So you can imagine that you are an entrepreneur and you are going to start a business. For this, you have to cross four stages. First stage is that you have to decide what assets are needed for your business. It can be premises, machinery, equipment, anything. And after deciding this only, we can start a business, isn't it? So this is the stage 1. In stage 2, we have to decide how much should be invested for each assets. That is, the total investment is the second stage. In stage 3, we have to determine how much cash is needed to run the business, because it's not only for initial stage of business that we need investment, but also in daily basis we need fund to run the business. For example, purchase of the raw materials, salary is given in monthly basis, daily or weekly basis wages are paid, electricity bill is paid. So for this all we have to determine approximately how much fund is required for all the expenses, and it is comes under working capital. Stage 4, it's very important. It is how we have to raise the fund. We have to decide the sources to finance investment. So what are the sources? As an owner, when he bring money, he call it as capital. In a company's case, it is share capital, and in partnership case it is partners capital, and even proprietorship it is proprietors capital. So the owners brought the fund, it is termed as capital. As a business entity, we can borrow money from bank, loan from financial institution. We can also raise debentures. So these are the sources. So while deciding the sources, two important things have to be remembered. That is, the cost of fund you are raising should be minimum, because these funds are invested expecting return either in the form of dividend or interest. The owners expecting dividend and also the bank giving debenture will be expecting interest. So if they are expecting more return, it will affect our business, right? Then next is taking into consideration. While raising capital, you have to make lowest possible. Next, we should consider whether the risk element also while raising fund affect or not. So if so, it can be manageable. It should be ensured while raising fund. So these four stages should be considered while starting business. Managing these stages are considered as financial management. So financial management is concerned with efficient acquisition, allocation, and making profit for owners. So next we can see that finance decision. The finance decision is focused on three areas, that is investment decision, financing decision, dividend decision. Investment decision is concerned with effective utilization of fund in one activity or the other. So it is just where to be invested. Okay. The next one is financing decision. It is how this fund is raised, that is determining how the total fund required by the firm will be made available through the issue of different types of the securities. The next one is dividend decision, that is the profit is given to owners through dividend. Dividend decision help the management in declaration and payment of dividend to the shareholders, and it decides how much of earnings should be distributed among the shareholders and how much should be retained in the business for future expansion. Hope you like the video. If you like my video, please click like button. Thank you.